Here's a fun fact nobody tells you. Over your lifetime, your single biggest expense won't be your house or your car. It's taxes. But there's one completely legal account where the government looks at your investment gains and says, we'll take nothing, zero, forever. It's called a Roth IRA, and today you'll understand it better than most adults ever will. Quick heads up, this is my personal research, not financial advice. Here's the plan. First, what a Roth IRA actually is, in plain English, no jargon. Then, how the tax magic works, the rules and limits you need to know, how it compares to a traditional IRA and your 401k, and then the exact steps to open one tonight. Plus the 3 mistakes that quietly ruin it for beginners. Grab a coffee, let's go. First, the thing that confuses everyone. A Roth IRA is not an investment. You don't buy a Roth IRA. It's a bucket, a special account, a wrapper that you put investments inside. Stocks, index funds, ETFs, they sit in the bucket. And everything inside that bucket gets one superpower: special tax treatment. That's it. That's the whole concept. To see why that matters, look at how a normal account works. In a regular brokerage account, you invest money you already paid income tax on, and then, when your investments grow and you sell, the government taxes you again on the gains. Taxed going in, taxed coming out. Every dividend, every profit, it all gets a haircut. The Roth IRA flips the second half off. You still pay income tax on the money before it goes in. No way around that. But once it's inside the bucket, the government never touches it again. No tax on the growth, no tax on the dividends, no tax when you withdraw in retirement. You settle the bill once, up front, and then it compounds completely untouched for decades. Let's make that real. Say you invest $500 a month in a Roth IRA for 30 years, earning 8% on average. You'll have put in $180,000 of your own money, and the account grows to roughly $740,000. That's over $500,000 of pure growth. In a normal account, a big slice of that goes to taxes. In the Roth, every single cent is yours. Quick pause. This channel is brand new, and if this is helping you, the single biggest thing you can do to support it costs nothing. Hit subscribe. Here's my end of the deal. One video like this every week. No hype, no upsells, just the research. That's the promise. Okay, back to it. And here's the detail people underestimate. It's not just that you skip one tax bill at the end. In a taxable account, taxes nibble at your returns along the way. Every dividend, every rebalance. Each nibble is money that can't compound anymore. The Roth removes all the friction. The snowball rolls downhill for 30 years, and nobody stops it to take a scoop. Now the rules. There are 3 that matter. Rule 1, you can't put in unlimited money. The contribution limit is currently $7,500 per year, a bit more if you're 50 or older. The government isn't that generous, which means every year you don't use the limit is tax-free space gone forever. You can't go back and fill up 2026 later. Rule 2, you need earned income, money from a job or self-employment, to contribute. And on the other end, if you earn a lot, roughly north of $150,000 as a single filer, the ability to contribute directly starts phasing out. There are legal workarounds at high incomes, the so-called backdoor Roth, but that's a video for later. For most people starting out, you qualify, full stop. Rule 3, and this is where the Roth gets surprisingly friendly. Your contributions, the money you put in, can be withdrawn anytime. Tax-free, penalty-free, no questions asked. It's your money, you already paid tax on it. The growth is what has to stay until age 59 and a half, plus the account being at least 5 years old. Touch the earnings early and you'll usually owe tax plus a 10% penalty. That contribution rule quietly solves the biggest fear beginners have. What if I need the money? A Roth IRA is not a prison. If life goes sideways, everything you deposited is reachable. Should you rate it? No. Every dollar you pull out loses its tax-free superpower forever. But knowing the door exists makes it a lot easier to walk in. Now the classic question, Roth versus traditional IRA. Same bucket, opposite tax time. And that gives you the rule of thumb. Early in your career, income modest, tax bracket low, you're paying low taxes on Roth contributions today and dodging potentially higher taxes later. Roth usually wins. High earner in your peak years, the traditional deduction today might be worth more. And if you genuinely can't decide, splitting between both is a completely legitimate answer. Tax diversification is a real strategy. Next comparison, the 401k. That's the retirement account through your employer. Higher limits, but usually fewer investment choices and often higher fees. Here's the order that puts you ahead of almost everyone. First, grab the full employer match in the 401k. That's an instant 100% return, free money. Second, max what you can in the Roth IRA. Third, back to the 401k for anything beyond. Match, Roth, then more. Now remember, the Roth is just the bucket. You still choose what goes in it, and this is where beginners face a menu of thousands of options. My personal answer stays boring: broad, low-cost index funds. A total market fund like VTI or an S&P 500 fund like VOO. One or two funds. That's a complete portfolio. If you want the full breakdown, I made a whole step-by-step video on exactly that. It's linked below. All right, the practical part. Opening a Roth IRA takes about 15 minutes. Step 1, pick a major low-cost broker, Fidelity, Schwab, or Vanguard. All three are fine, don't overthink it. Step 2, on the account selection screen, choose Roth IRA. That's genuinely the whole trick. Same sign up as a normal account, you just click a different button. Step 3, fund it. Link your bank, transfer what you can. $25 is a real start. The limit is just the ceiling. In step 4, the one people forget, and it's the most expensive mistake on this list, actually invest the money. Depositing cash into a Roth does nothing by itself. You have to then buy your index fund inside the account. Deposit, then invest. 2 separate steps. Step 5, automate it. Set a recurring monthly transfer and a recurring buy. Most brokers let you do both in 2 minutes. $625 a month maxes the current limit, but any amount on autopilot beats a perfect amount you have to remember. Set it, forget it, let the bucket fill itself. Now the 3 beginner mistakes. Mistake 1, we just touched it, but it deserves its own warning because studies keep finding people doing this for years, contributing and never investing. The money sits in the account as cash, earning basically nothing, while the owner believes they're in the market. Open your account right now if you have one and check. Seriously. Mistake 2, waiting until you have enough money. The Roth rewards time more than size. Remember, the growth is what escapes taxes, and growth needs years. $25 a month starting today beats $300 a month starting in 5 years. The limit resets every January 1st. An unused space never comes back. Mistake 3, treating the tax-free bucket like a casino. Because there's no tax on gains, some people think, perfect place to day trade. The math says otherwise. Most active traders underperform the boring index. And inside a Roth, losses hurt double because that tax-free space is capped and gone. The superpower deserves your most reliable investments, not your wildest bets. The honest fine print. The exact limits change almost every year. Always check the current IRS numbers before you contribute. The rules I described are the standard case. Edge cases exist, especially around high incomes and early withdrawals. And the 8% in my example is a historical average, not a promise. Markets will drop along the way. The plan works if you keep buying anyway. So, the final verdict. A Roth IRA is a bucket, not an investment. You pay tax once on the way in, and then decades of compounding happen completely tax-free. Contributions stay reachable if life demands it. The order, employer match first, Roth second, everything else after. Fill it with boring index funds, automate the deposits, and then commit the hardest act in all of personal finance. Leave it alone. Do that for 20 or 30 years, and the government share of your biggest pile of money is a number you'll genuinely enjoy: 0. If you're now wondering what exactly to put inside your new Roth, the step-by-step $100 starter guide is on the channel, and it picks up exactly where this video ends. Watch that next, and you'll have the complete system. Enough planning. Open the account this week, set up that first automatic investment, even if it's $25, and let the machine start running. Future you is going to be very, very grateful. Thanks for watching. Stay calm, stay invested, and remember, the The market rewards patience. The koala knows. See you in the next one. Your Finance Koala.